Oh yeah, we live. All right, what's up, Facebook fam? Man, it's time is 7:54, December. What we got? December 27th,
Mm-hmm.
episode 1 of Maintain Your Gains Trading Group. Man, we just gonna be kind of chopping it up, and with it being the first,
Yep.
the end of the year, it's only right for us to kind of jump into that end of the year conversation about the taxes. So, first thing I was gonna ask Mike was, you know, did you get any more information? I know we kind of talked about it once, but did you get any more information about how we should proceed with the gains and the tax conversation?
So I've been really looking into this pretty heavily lately. Like, there's a thing called the trader tax status, which helps change your tax status. So everybody knows normally when you have stocks and your investments, you can basically write off $3,000 per year, which is a really good amount of money that you can write off. But if you go to a trader tax status, that's something where you can basically, uh, at the end of the year, basically your gains and losses, your unrealized gains and loss, you can use those, and you can basically use your unrealized gains and loss as the actual gains and losses. You can write off any losses in that year, so you can write off more than $3,000. So going to trader tax status is something I've really been looking into. I was looking on YouTube to find this, just kind of get more information about it. I'm looking at CPAs that are local to Dallas or local to just in general, local to the United States. And I had found I think his name is Brian Rivera, who he seems like a pretty reputable guy. So that's kind of where I'm at right now. I mean, the problem, as we started this journey, going into selling calls, and just being on the sell side of options. The great thing is, you're staying so liquid. But the worst thing about that is everything is in short term, as you know, Rufus Marcus. Everything is in short term, or schizo. Everything is short term gains. So that being said, you're paying your nominal tax rate, 25% or whatever. So it's just something that I'm looking into, trying to find a tax accountant that works mostly with options and traders. I think I found one, but I'm still kind of looking. Have you found anything, Rufus?
No. I haven't seen anything, but I am looking at what you said. I mean, other than the basic tax information, but what? Wait, so you say it's called trader tax status? That's
Yeah,
like some kind of law or something like that?
it's a law. It's a law. So I mean, I would definitely say if it's a law that I've been looking into, and so it's kind of a lot. And mind you, I'm not an expert, so it's called, like, what you have to do, a designation through the IRS. It's called mark to market
Yeah, I
designation.
see that. I see the mark to market. Yeah, I
Yes.
see that.
So once you
So
do that,
so
go ahead.
but so
Yeah.
the first thing is the 3K. You got 3K in losses. You can claim that against 3K in gains.
Yes.
We're on the same page
No,
with that, right?
100%, 100%.
Okay, but you saying through the TTS,
Yep.
the trader tax status, you can
Yeah.
claim more than the 3K?
Yeah. So you basically, instead of having you change your status in the IRS eyes from an investor to a trader. And as an investor, it's a normal person, long-term gains, capital gains, dividends. That's what you're looking at. You have $3,000 max. You have a $3,000 max, a yearly loss that you can write off against your earnings, right? Everybody understands that. If you don't, that's just a really good thing to start off and looking into in your investment journey. That being said, well, how if you have a year where you have, $20,000 in losses, right, that you want to write off in that year? If you go to a trader tax status, you can actually write off those $20,000 in losses, right? Because at the end of every year, your unrealized gains and your unrealized losses, you're basically, instead of letting those carry over from this year to the next, let's say this year in Amazon, you made $3,000 on unrealized gains, right? You had capital appreciation of $3, $4, $5,000 or whatever that number might be, right? Well, with a mark to market, you're going to basically be paying taxes on that $5,000 of unrealized gains. But the best part of that is, if you have $20,000 of losses, right? You can write off that $20,000 of losses in the same year again.
Because in a normal case, the other 17 from the 3, you have to kind of carry over
to the next year.
You can only carry it over like 1 year
Exactly.
or something like that.
I think you can carry it over. I'm not sure how many years. I want to say like 5 or 7, but I know you can carry it over for a
But
while.
it's a limited amount of time you can carry it over. But
yeah.
nevertheless, you have to carry it
Yes.
over after 3K. But this,
Exactly.
you can do more money. Is there a max on how much you can do from what you see
No,
so
I mean,
far?
no, it works as kind of like a business, right? It's kind of like,
yeah, that's what I was gathering.
Yes, it works just as a business, right? Yeah.
Okay. So you just learned about this since the
No,
last
I've
time
been
we talked?
looking into this a while for like the last like month or two, right? I think I hit y'all up in the group chat a while back ago to talk about some of the trader tax statuses that we might have, or the you know what? I think I hit y'all about a month or two ago about the tax situation that y'all going to be doing by the end of the year. And at
Right.
that point, at that time is when I started looking into trader tax status. See,
Okay, so that's what I was saying. So yeah, you found this since the last time we talked about the tax
yeah,
situation.
yeah, yeah.
Okay, I got it.
And it's good because it's something that I think that we can all benefit to. Like, you know, if you're specifically active in the market, like really active, this is really good for us. You know, and you know, so but the hardest part is I think you have to be super active to kind of get to this point in time. So
Okay.
yeah.
We'll see.
And I'm sorry,
Well, so what
Go
I'm
ahead,
saying
Mark.
what's super active? Like, do you have to be to like get to that part?
Yeah, so at least this, mind you, like I said, I'm not an expert, but going into just looking at the IRS and looking at just different forms, different information that's online, that's available on YouTube or whatever, you definitely will see, you know, you need multiple trades a day. Like they're expecting maybe, let's say, if you have 260 days of trading in a year or whatever that number is per year of trades you can have, they're probably going to expect, you know, 3 trades a day, right? But a trade is an open. When you open a position, that's one trade. When you close it, that's another, right? So they're looking for probably around 700 trades in a year at minimum, just from the information that I was gathering. That's kind of consistently spread out through the entire year. So this is kind of what I've gathered to this point, and I think it's just an opportunity that you can use trader tax status to go ahead and just really, if you use trading as a business and you're active enough, I think you can really work on work on lowering your taxes, because that's the hardest part, right? Like, and every time I look at the taxes, that's what scares me the most, right? When you have to pay an additional, you know, 10,000, 20,000, whatever many thousands of dollars you want to pay in taxes. Yeah, you might have made a great amount of money in the year, but you're taking such a large hit. So I think it's a great opportunity for anybody that's really taking trading as a business, as opposed to just you know, a hobby or something that you do in your downtime. Go ahead.
But that's a good hit then, because I would just Google it X and then try to see what you see from there.
Mm-hmm.
I Googled it up. I already found one article. I think I'm gonna read up on this, Mike, and then opposed to us having another conversation about it offline.
Yeah.
Maybe next week I'll revisit this with you after I kind of have a better understanding, because I hear what you're
No.
saying, but I don't really, just like always, I don't get everything
No.
you're talking about. So I'm gonna read this article, and then we can jump back into it next week as well.
I think that's a really good idea. You know, it's something that I think we in our group we should all read. Like, I mean, you know, once Marcus is just getting started here, so I know you're kind of like, you know, legging into this and kind of really going forward right now. But it's something that even you know, if you're starting on this options journey with us, bro, you should really start looking into these things now, because as you start to get more capital into your account and you start to make more money per month or per week or however your gains are coming in, you know, you're gonna absolutely have to figure out, you know, how do we reduce your taxes? You know, that's 25% off top. You know what I'm saying? It's off top.
That's one thing I was looking at actually, Mike, because I know I was reading up on taxes, and it talks about capital gains tax and all that, and the money that you get, you know, that year versus holding on to a stock and like waiting to sell it after a year. I know before a year they consider capital gains tax, and capital gains tax, I know they tax like 20% or above.
Yeah.
Last I checked, it was like 22 or something, but that was a while back. And I know that the tax rate changes like every year. It just depends on how Congress feel or whatever. I know it changes like every year. So that is one thing that I was looking at, was the taxes and how much I would have to pay on it. And then also I was looking at different tax write-offs. So I know that people that hold on to stocks or whatever, I know a lot of times they would sell the stock in like December and count those losses. Whatever the stocks went down to how much money they lost, they would count their loss, and then they would buy that stock again back in like January. And then they would do that just to use it as a tax write-off.
Yeah, so they gotta wait 30 days for that with the wash sale rule, though.
Yeah, exactly. But
mainly what you talking about short-term capital gains versus long-term capital gains with that, that 12-month thing.
Yeah. And I think Go ahead, Rufus. I'm sorry. Go ahead.
I was gonna say the other thing I've been looking at before you mentioned this. I'm going to read up on this, like I said. But the other thing I looked at from Betterment, Betterment.com. They're always talking about the tax loss harvesting.
Yeah.
And so I was trying to understand that more, but from the example I read, it was like it's pointless because I couldn't. So basically, what the tax harvesting thing said was, if I lost 10,000, if I gained 10,000, I could cut my losers, kind of like X was just saying. I cut my losers to equal that 10,000. So but it's like at that point, well, if I'm doing that, what did I gain? You know what I'm saying? If I made 10 and lost 10, what's the point? So I didn't quite understand the tax loss harvesting just yet.
I think, going to the Betterment and the tax loss harvesting from Betterment specifically, I'd have to really read up on how they're specifically doing it, because I know
it's not just Betterment, but just tax harvesting.
I understand, because I know just from reading it on Betterment, it's been a while since I read into it, but I know they're using like securities and using the sale of the security that's gone down significantly and buying back into a like security. But like I said, I'm not sure. The tax loss harvesting is something that I'm not really deep in. I don't have a lot of knowledge of that one, how Betterment's doing it. I have it activated right now, but let's say, hey, if they can,
E-Trade?
On Betterment.
Oh yeah, because you still got Betterment. Well, not to give Betterment any.
No.
Listen,
man. Listen,
I was not happy with them.
Listen, man. Betterment.
Man, Mike was on Betterment for a minute though.
No, I'm still on Betterment, man. I've been on Betterment since 2012, man. Betterment is my best friend and my worst enemy, man. Like I just feel like the returns on Betterment are not as good, or not as good as I'd like. Like, bruh, like. I was looking at, I had to email Betterment recently, like real recently, like, bruh, y'all not doing enough. Like the gains is not enough right now. Like how am I, like, since I started my account, the S&P 500 is up, I forgot, like 200%, My Betterment account, it's not up that amount, but it basically says the cumulative return, like time-weighted average return is.
What you saying is up 200%?
The S&P.
I know you're not talking about the S&P.
This is, I know, I understand that. This is how Betterment shows
like
it.
In general, 200%.
No, it's just the way that they do their numbers. It's like the cumulative return, like with the money that I put in, how that kind of is gone over time. It's just what they're saying on Betterment, right?
So Mike, with Betterment, like, do you have like a portfolio manager like handling your money or something? Are you doing it yourself or what? Like, are you investing in like a certain stock within Betterment? Like, what are you doing with them exactly?
Yeah, so that's a good point. So with Betterment, I'm using those as a robo-advisor, right? So they're basically going ahead and they're investing it for me. I put in a certain amount per month or every paycheck, and they go ahead and allocate those funds, the dollars that I put into Betterment, to a specific stock. And it's usually it's a bucket of like 6 or 7 stocks. And honestly, like, I don't need to use Betterment. Hold up. I don't need to use, thank you, Marquis. Marquis. I see you, thank you, boss. But I don't need to use Betterment. But the thing is, I like it easy. Like, I like to do things easy. You know what I'm saying? Like, I don't like to stress about all my investments, because I know Rufus is like, screw that. I like it. I
mean, it kind of sounds like you were stressing about it because you feel like you're not making as much as you can.
Well, that's the thing, though, right? Like, because I am not making as much as I can, I at least want something that's easy, right? Like, I go onto the options. Like, I'll go into E-Trade, and then I'll do my thing in E-Trade, because that's me actively working on something, right? And I know, so I'm hesitant right now. I tried it, but it didn't work out like I wanted it to. I'm hesitant to liquidate my account fully and transfer those funds from Betterment to E-Trade, because once I do that, then I'm fully committed. Like, I have fully committed to the option strategy, but I do like to have stocks. Right, because in my opinion, having some stocks is it's just a positive thing in your account. It creates additional capital. But go ahead, Rufus, man. I'm hogging the mic, man.
No problem. Not at all. You got more
good information, bro.
You got more information on most things than I do. Just for the audience, anybody looking, watching. We do have a strategy we run as a group, basically as a trading group. We'll probably get into that a little bit more as the trading picks back up. Right now during the Santa rally and the end of the year, trading volume is really low.
Yeah.
So we doing a little trading, but it's not as popping like as it normally would be during the year. So maybe in the next couple of weeks, as we get into January, we'll probably get into that a little bit more. But like I said, one point of clarification, X. the Betterment isn't really much different than probably your Vanguard that you're doing.
Yeah,
just to let you know. Now, and like I said, the point of the tax harvesting point that I brought up, it wasn't even about Betterment at all. I was just saying that's the first place I saw it. I went and Googled it for myself, and when I went to Google kind of what it means and how do we use it, that's what I was saying I was confused about. So it really didn't have, Betterment is almost irrelevant to the conversation. That was just the first place I saw it. So I need to maybe, I guess, talk to somebody about the tax harvesting part to try to figure that out a little bit better. But first, I want to look into this TTS thing that you brought up.
Yeah.
I'll look at that in the test tracker that you mentioned earlier. Like, I didn't even know about that.
It's
What'd
called,
you say?
It's called the trader tax.
Status.
Yeah, that's what I said.
Yeah. I mean, and I think like what really, if you're starting to leg up into this one and you're really starting to be more active into selling puts, selling calls, doing doing cover calls, doing cash cover puts, whatever you want to do, or even if you want to go long and you start saying, hey, I want to buy calls or buy puts, whatever you're trying to do, I think this is a really good strat. It really helps you. It really helps to reduce your capital burden because it changes you from an investor to a trader. And as a trader, you're running it as a business. And as a business, you have business expenses that you can write off. And that's going to be the positive value of going to trader tax status, is you're a business.
Yeah, and that's the important thing.
Most
definitely.
Most definitely. Go ahead.
Speaking of that, from a business perspective, now they're changing the way that let's say you had a business and you had a contractor that you're paying. Mm-hmm. Well, you have to report that contractor in the taxes for your business or whatever. In the, I think it's the I forgot the name of it. It's the W something 99. It's the contract.
1099.
The miscellaneous. 1099. Right? The
and B, I think there you go.
The miscellaneous 1099.
Yeah.
That was the old way in the past. So you have to report that contractor with the miscellaneous 1099, but if that contractor didn't make more than $600, you don't have to report them. You can just go right over that worker. You know what I'm saying? So that being said, from the business side of it, talking about the trader tax status, it'll be, since you're just getting started, if you're not over that 600 mark, you might not even need to report the gains at all.
Yeah.
So let's just say you made $30. You know what I'm saying? Let's say you made $30.
Yeah.
There's no reason for you made $30 on a tax thing, because you have to be over 600 when it comes to reporting a contract worker. So from that from that business mindset, so it might be the same way. It's something you'd have to Google because they changed the law so much. Like even this year, that's how it was for my contract workers last year, right? I didn't have to report them under 600, but this year, if they changed it, I think you have to report everything. You know what I mean? So it changes from time to time. So you got to kind of look into it. But there's just something to note to maybe look into. Is all I'm saying.
Okay.
Yeah, I mean, and I think that's a really good point, right? We just going into the trader tax status. Like I said, it's something that if one day we get the opportunity to ask somebody online or somebody to come on and talk to us about that, I think that'll be really helpful. I think it can really save a lot in tax. If you have a lot of business expenses, you're going through seminars, you're doing research, you're having research that costs you money using, like let's say you have the Morningstar Plus subscriptions, things like that. Those are write-offs that you can definitely use. Or even if you say you have a home, I mean, Rufus is a CPA, so he can go ahead. Yeah.
Schizo, what's up?
Yeah.
Schizo.
Yeah.
Schizo.
Yeah, that's a good point. Like,
you said I got a what?
You're a CPA, or you're not? All right, so you can.
No, I didn't. No.
Okay.
No, don't do that.
This is bachelors. This is bachelors. No CPA at all.
Well, you're an accountant. At the very least, you are an accountant.
Hey,
so
we'll say I'm an analyst.
Listen,
budget analyst.
You know the most about. Well, in this group of people that we talk to currently, you know the most about taxes more than anybody else. So that's facts. That's big facts right there.
I guess we're more fancy. Well, I guess we can run with that.
So
that's good to know, because I did think about, like, I don't have a subscription yet, but I get news from Bloomberg from time to time, and they be trying to charge, and I'm like, no, for what? So that's good to know. Like, I could pay a subscription for that, or Forbes, or Kiplinger, or whatever.
Yeah.
Right,
but this
people don't know that.
That's a good point though, Mike, because you got if you want to take it to that level, I would think Robinhood Gold would qualify.
Yeah.
You know what I'm saying? $5 a month for Robinhood Gold.
See, I don't know. Honestly, I don't know if that'll qualify, because like those are like, that is a fee that you're associating with it might, and I need to look into the law a little deeper.
Oh, so
but
it's a business expense in order for me to get the margin to carry over faster, for me to get, you know how you said Morningstar, we get access to those Morningstar reviews.
Yeah.
So it's really an expense of me being a trader. Otherwise, I wouldn't have it. So let me put it like this. So for me, I put it on the taxes. If I do it with the trading, the TTS, I'm putting it on the taxes. And then if it doesn't qualify, they're going to have to come for me for that.
No,
they just have to come for me.
I agree with that, because to me it makes sense, right? Like there's a lot, the IRS is weird with some things. Like we can't write off our commissions against our gains, right now.
Also, that's why you're trying to say
that's
it might not qualify. There is some weird
stuff like that, right? Because you can't, like, currently, like, I'm paying, like, y'all aren't paying commissions at Robinhood, but I'm paying them at E-Trade, right? So
and would logically, business expense, you would think that'd be right off
the bat.
Yeah.
But but even beyond that, like, that's like the commissions are going directly against my gain.
Right? So
right, it's a loss, right? I'm losing that.
Yeah, it should be a deduction.
It should be a deduction, but I can't.
So,
I cannot.
100%. You already looked.
You can't do it.
You can't. Okay, you already
can't do it.
Got you.
So.
Maybe the laws will change like in 2-3 months or something.
This is the way it's been. Right? It's just commissions. You take that L and you like it.
I have never even thought of that, bro. To be honest with you, I mean, it makes perfect sense.
Yeah.
I didn't never even think as because how it tallies up at the when they give you a sheet at the end. I gotta see this is what I lost, this is what I gained. So just look at the losses and I compared to my gains, and I ain't never even thought about that. But you actually make a really, really, really good point. Like really good point, bro. Like commissions should definitely be something right off.
Yes, and it definitely ain't. They ain't playing that. Government don't play that commission game. Government like, I'm gonna get my dollars regardless of what you doing. That's what I'm gonna do, right?
That's why, we're talking about the government. They definitely gonna get you, bro. So.
Every penny they can get, because they gonna take it. Why? Because commission is just a cost of doing business, right? So that's why I don't know. Like Robinhood Gold, you might be able to use Robinhood Gold and use to write off the cost, that whatever the fee is, $60 a month or year or whatever it is. But I don't know. $5 a month times 12, $60 a year.
Oh, okay, that's what you mean.
Yeah. But that's what I'm thinking. So I don't know if that's the case or not, but it's definitely what I'm thinking about right now. So I'm like, sheesh.
Well, maybe with
for the test person.
Maybe with with your old information, you can't write it off. But maybe with the TTS.
Potentially.
You looked at it, maybe with the TTS, it does qualify. Have you already looked into that?
No, I have not. I haven't looked in. Like I said, honestly, I've scratched the surface of the trader tax status, but I really have to talk to a CPA that's really good with investors and traders before I would be comfortable, really giving people like really solid information about that, because, I haven't used it, and I don't have that mark-to-market association currently, so I don't have a trader tax status. So since I don't currently have that myself, like how can I, really tell you, this is really good for somebody that's a really active trader? Like that's the first and foremost. If you're listening, or if you ever want to listen to this, is you have to be extremely active before you can do the trader tax status. And if you are, then you can really. It can really be beneficial to you. Like it can really be beneficial.
Mike, you should not have told me that, bro. I really feel a type of way, bro.
I'm telling you, bro.
Because I got E-Trade too. I got E-Trade too. So I really feel some type of way, bro, that you can't, like, that's legit. If you was in any other kind of business, bro, 100%, it's like, this is taken away from my bottom line. How you gonna tell me I can't deduct it? It's an expense. You tripping.
Yeah. And I think with the TTS you might be able to, but I don't know. Like with normal 3,000, that is losses due to capital gains, right? So those are capital, and commission is not a capital gains loss. So if I'm wrong, I'm mad confident about it, but I'm like 99% sure that I'm correct about this.
I'm looking it up. I mean, I'm seeing it already. Like first hit on Google, I'm seeing we ain't talking about it. I see it right off the rip.
Yeah. So you can. So like even this year. I paid almost $400 in commission this year. That's money that's not. I'll never see.
At the end, if we're talking about success, if we're talking about success as a trader, 400 is nothing, right? But
exactly.
You know what I'm saying? Like
exactly.
It's nothing, but it's still something.
It's like this is $400.
$400. I want my $400. You know what I'm saying?
It's still $400.
Yeah, and like I said, this was year one. This is kind of going into year one of our new options, strategy that we've been pulling out here, right? That we've been really ramping up this year. Well, year two, like if I'm doing 400 this year, I started out in like February and I slowly ramped it up. Shoot, well, next year, I mean, you know, I want to try to do 1,000 trades next year if I can.
Right,
so
and that's more commission.
That's more commission. I mean, I'm paying 50 cents per trade right now, so that's at least 600. That's at least $500 right there, and then that's only on. Well, shoot, that's a lie. If I open 1,000 and I close 1,000 on each side of it, that's 50 cents, right? So that's $1,000 off top. If I get to 1,000 trades next year, that I'm taking an L on, $1,000 of loss immediately.
It may sound crooked or something, but like, what if you write it off on the taxes as something else? Like, don't write it as commission. Like, write it as some.
Oh yeah, it don't sound crooked. 100% crooked.
Yeah, it is.
But
you know what Akon? Yeah. When Akon said I'm locked up, that's what's gonna happen. Because the tax man gonna eat. You know what I'm saying? Like, you out here thinking the tax man is not gonna eat. You lying to yourself, man. The tax man gonna eat. So no.
I know, just a thought.
I mean, you know, I could also say, let's go to market and just say, you know what? I built a house on my, you know what? I had to build a house to make these trades work a little better, you know? Got to write off 50,000, you know? It's the same, conceptually, it's the same thing you're talking about right now.
Right, but because it's small fish, you might sneak it down.
You shoot, it's small fish, shoot. Government loves, let me tell you who the IRS loves getting after. People that make less than $200,000 a year. You know why? Because you can't fight it. You know what I'm saying?
So you cannot afford to fight this.
You cannot afford to fight that. Yeah. Listen, government is undefeated. That's what I want to tell you right now. They are undefeated.
True.
Man,
it's like time.
Bad, bro. That's messed up, though, bro. I'm gonna read this article. I just pulled up an article on it. I'm gonna read this one too when we get offline. But man, that ain't right, man.
Yeah.
But yeah, like you said, you know, we are coming up against the clock, though. You know, we kind of said we didn't want to do more than somewhere between 15 and 30 minutes. We got about 5 minutes left. I did have one more thing, just very quick question I want to ask you. The triple Qs, that's NASDAQ, right? We talking triple Qs, we talking NASDAQ? Okay. And then we got TNA is small. And then, so who we doing for the Russell 2000 then?
Yeah, I think the Russell is, I forgot what it is, but I think it's
what we doing. So we basically don't have one that we're running, right?
No, we don't, right? Like, so I've run puts on the XPXL, the triple, the SP 500. I actually haven't run triple on the triple leveraged options on the Dow, the UDow. I haven't run anything on that either, but it's something that I've been thinking about doing.
What's the ticker?
It's UDow, like up, Dow, UDow, UDOW.
I see it.
Yeah, I think.
They must.
Well, you know, to me that don't matter, right?
Yeah, because you a douche.
Yeah.
I see, bro.
But I mean.
But it makes sense though. I see it. The Dow triple. I see it.
Well, the problem with the problem with the S&P 500 triple Q or the triple leverage option, and also with the SPXL. So the problem with those is that the SPXL.
That's the problem.
Well, to me that's not a problem at all. The problem is there's a lack of volatility right now in the S&P 500, right? Like you see the volatility, the IV, it's like 45-50% on a triple leverage option. Like on the S&P 500 currently, the volatility is probably less than 20%. Like the IV rank is mad low, volatility is low. Like it's just a situation right now where there's no volatility in the S&P 500 or in the Dow, and all the volatility that we do have is in the NASDAQ. And I'm not sure about the Russell 2000, but with all the volatility being in the NASDAQ, that's where you have to really be looking at right now. And as we've seen over the last 7-8 months, right, all the gains have been in the NASDAQ. Like it's just technology.
So bring it back to my question though. You didn't actually answer because you might not know. So we don't have do you know the triple for the Russell?
No, off the top of my head, no. It exists. I know it exists. I just don't know it.
I'll look it up real quick.
Yeah. You have any questions, Marcus? Man, I've been hogging the mic, but man, you want to talk about anything, man? Don't let me hog the mic. Shoot, I ain't trying to be that guy.
Like I said, man, like I told you earlier, man, I'm just here to learn right now. Y'all got the knowledge and everything. I'm learning about this test thing that you mentioned earlier, so I'm definitely looking at that after this.
And you know, so one thing that we always say is, you know, I run, you know, when we started this option strategy, you know, I was looking online and I was looking on YouTube and I was looking for an opportunity to help make additional income, right? So once I start speaking to Rufus about this, or Schizo about this in February, I'm gonna forget. It's gonna come one day. I've known you for one thing for the last 14 years. It's hard to change in one day. But anyways,
so you just forgot the other things.
Yeah, that's what I'm saying. But once we start running this strategy, you know, back in February, when I started running this back in February, like I started doing these shorter term plays. You know, 1 day, 2 days, 3-day plays, like really short term plays, which is more of what the group does as a whole here, right? But after a while, you know, I started reading up more about it, and just from what I read, I haven't done the research here to say, yeah, this is definitely correct, because I've seen counter examples with Schizo and Space Ghost, that both of them are, you know, they do shorter term options, right, or shorter term length of options, and they're really extremely profitable right now. But I go out, you know, further out. Like I try to go around 45 days out in my strategy. 45 days out, 50%, cut 50% of profit. I'm cutting out 55%. I'm cutting out. For me, that just makes a lot of sense, right? My win rate is right now. My win rate is like 94%. You know, win rate. So, you know, if you've seen something good, you know, you do that. So one thing I want to tell you, Marcus, is, man, try different things. That's the whole point. That's the whole point of this conversation I'm trying to have. Is try different things. You know, if you want to do shorter term options like Schizo and Space Ghost, definitely try that. If you want to do longer term options like myself, I would definitely try that out. You know, give the opportunity right now to grow and to learn new things as you're just kind of getting better at, you know, trading options, right? Don't just stick with one thing. Go ahead, Rufus. Or go ahead.
I'm definitely gonna be calling this cat Ghost if he's gonna stick with that name, bro. I'm
definitely
gonna just be saying Ghost. I'm just definitely calling him just Ghost.
But yeah, Mike, like I ain't gonna lie, like since I got back and Rufus got me on this options thing, like I won. Like I ain't gonna say won, but I got the profit off that first trade.
Yeah.
Once I was making money off of that, like I just took off ever since then.
And that's how it goes. That's how it goes. Like once you could, the first thing is it's like a stage of I guess fear, you would say, that people go through, and then once I show them that first one, bro, and it's like, wait a minute.
Yeah.
It's like this easy.
It's like you showed me that first one, and it was like, oh, in a week I could do this. Oh, man, let me get some more money. Let me see what I can do. Let me see how much I can make with more money. And I was thinking, because I told Rufus this too, Mike.
Yeah,
it's like you said, like, because of course the further you go out, the bigger the premiums.
Yeah.
So I was like, you know, let me try that. So I am trying that now. I'm doing like 2 or 3 weeks out just to get a bigger premium and getting out of like 55, 60%.
Yeah, I think
I tried that recently within the last couple of weeks, and I profit off of that as well.
Can y'all still hear me?
Yeah, I still hear you, but you need to turn the mic on and off because it's frozen.
Yeah,
I don't know what.
No, my video died. My camera phone died.
Okay.
Got you.
Yeah. Anyway.
But yeah, Mike, I did different. I did the short term and I did the long term.
Yeah.
Like I said, like I noticed the further you out, the bigger the premiums are. So I'm doing both of them right now. But right now I'm still learning. I still look at videos on YouTube just to learn more. Just see what else I can learn. I still read up on it and everything. So
I think that's the best thing, right? I mean, I'm always looking at. I'm always trying to read. I'm always trying to look at YouTube videos. I'm always trying to find a new resource to help me learn, right? Because in everything, in any journey that you're going to run on, if you stop learning or you're not trying new things,
they want to become
stagnant. You can become stagnant, right? So, and
we had just like the stuff y'all put in the chat or whatever. It's like I'm learning off of that. I see new stocks that y'all put out. It's like, okay, let me try that one. I know about.
Yeah, and it's great. It's great because in that situation, right? You always want to be in a situation where, you know, you're not. I get this mindset too, which I hate doing. Is I don't want to just have one stock, right? That I put everything into one stock, right? Because I mean, I you know, it's good if you're right. When you're right, it's amazing, right? If you have let's just say you had, $50,000 in one stock, right, or whatever that number might be, and you're right about that one stock, and you're right for month after month after month. It's great. Every month you're
Tesla.
right. Yeah, Tesla. So, Tesla is when you're right in Tesla, you are good. You are good in that
That's
point.
True.
But when you are wrong, but you're wrong, and you went all in and you are wrong, that's when it hurts, bruh. That hurts. That hurts a lot. When you're wrong. Let me see if I can get
I feel like don't have all your eggs in one basket, but don't have too many baskets.
Exactly.
I think have a few and just watch that few.
Yeah, I mean,
I ain't gonna lie. I almost made I made the mistake, but I didn't catch an L. So I paid like most of my money on this one stock. I think like same expiration date and everything. And I talked to Rufus about it. He was like, "No, you're supposed to spread that out. At least if you're gonna pick the same stock, feel like a different date." So I had it all on that one day. Luckily, I still went at it at like 60%. So I didn't catch an L on it, but it's like it was a lesson learned.
No, he's talking about
if it went down, it's like
he's talking about the strike, Mike.
Different strike prices, same stock.
Yeah. So how I told you I did lab you that one time. $5, $6, $7. He had put everything at the $7 mark.
Yeah.
You know what I mean?
Yeah.
So that's what he kind of getting at. We are up against the clock, bro. We going on 35 minutes now. Just to wrap a couple things up from my side, the Russell 2000 ticker that we are doing is TNA. I'm tripping. Russell 2000.
Oh, that is
Russell 2000 is small cap.
I didn't realize that. Yeah.
Yeah, so we doing TNA, so we are doing small cap. It's the Dow is the one that we aren't doing.
Yeah,
that's
the Dow.
The one you just told me about. And then, of course, the SPY, because there's no volatility in that. And then the other thing I'll say as far as, just touch on the conversation you guys just had about, what the heck did y'all just talk about? Stagnant. That's what we just saw the last couple of weeks. We just touched into that credit spread, tool. You know what I'm saying? We're gonna kind of see how that works. So that's a perfect example of that, of continually trying to figure stuff out. I did put on a credit spread for this week on the triple Qs.
Yeah.
And not just the QQQ guys. I'm talking about the triple Q. So that's TQQQ for anybody watching, just for clarification, because we do have QQQ and then you have TQQQ. So I'm talking about TQQQ. So the triple Q's there. But yeah, that's it for me, man. Like I said, we are coming up on 35 minutes. So
hold on, you already started the spread though?
Yeah. I did it on Friday.
Oh man, we're gonna fight. You supposed to let me know.
Yeah. Well, it was on the triple Qs, driver.
That boy said, "I have to eat with or without you. I can't wait forever."
And one more thing, Facebook fam. We do have about a group of 6, 7, 8 people. We got a few other people. Maybe we try to get on next time. They a little tied up tonight, so they didn't get a chance to get on. But maybe next time they can kind of get on here and just show face and chat it up with us. But just for you, X, my name is Schizo. I don't know who this other guy is that you be talking about. It's not my name. My name is Schizo for the live. So FYI.
So, as y'all know, my name is Mike. This is MaintainYouGains. Go ahead, Marcus.
My name is Marcus, but I guess you can call me X.
So I'm going to name by my government name. Name my mother named me. So
Facebook people, man. I know I don't check my Facebook. I don't check messages. I don't have any tags. I got the tags all turned off. I got my comments turned off. But if you comment on our videos, you know what I'm saying, or say something to me on the videos, for sure, I'll try my best to at least check that video. But I do not check Facebook anymore. I've heard from many of people complaining about, like, what you got it for then? Well, here's the perfect reason why I still have it. I was able to get on Facebook Live without turning my account back on. I'm in it. I will be checking the comments on the videos as we get going here into the new year. But I do not check anything outside of that. Not friend requests or anything. I'm sorry. But yes, I don't. Sorry. So just FYI on that.
We got a phone number.
Yeah. Marquise,
but that's it for me, man. I'm good.
No
so episode 2 next week.
Yeah, we'll be back next week around 7:00. Everybody, just
if we don't have any technical difficulties,
next week
we worked out tonight.
Should be a little bit better than this week, of course. But yeah, we'll definitely be on. Just have another conversation about the market. We'll see where the market is went this week. We'll have a conversation about the positions that we've done. Things that we've done this week. Just kind of think about
touch
what
up
we
on
want.
the TTS again. We'll
We'll get
come back. I'll come back with what I found on that, and we'll talk about that again.
You can definitely expand, but we definitely, and going forward, we definitely want to talk about our strategy, talking about the future of the market that we have kind of coming up, and kind of what we want to do for the upcoming marketplace, right? Kind of what, hey, we see an opportunity here, we see an opportunity here, volatility in this specific stock is getting higher, or the specific industry is getting higher. Potentially, there's some opportunity there to run some puts or to run some covered calls. So we'll be definitely getting into some more hardcore information next time, but. For me, this
definitely excited to see how the market's gonna, kind of unfold over the next year too with without COVID. You know what I'm saying? There's always, don't worry about that. I mean, there's always gonna be something to trade. So, but I'm just interested to see, because you got a few people out there, a lot of new traders worried about, well, once COVID goes away, what we gonna do? But there's always something.
That's right. COVID ain't going nowhere.
I'm definitely interested to see what they're gonna make up, for this new year. Move the market.
Okay, guys. Well, Marquise, how like your boy? Because I don't think if you want.
His name is Marcus.
No, I'm talking about Marquise Lattimore. What you talking about? He's on the comments.
Oh,
yeah.
My bad. I ain't even looking at that.
Yeah, Marquise, get at us, man. If you want to try to join the group that we're talking about right now, if you just try and get on, But yeah. Anyways, that's it from me, guys. Thank you very much for listening.
Hold on, Mike. Before you cut it off real quick, let me check one thing. Video, guys, for anybody watching,
I'm here.
Hello? Hello? Yeah, the video pretty much done. So if anybody anybody is on our live, you can go ahead and feel free to leave. I need to just test one thing with Mike real quick before he gets off. So yeah, Mike, let me try to do this real quick. Or maybe, depending on how long this takes, I might just have you end it and then we try it after. I'm gonna give it 30 seconds.
That's a bet. Yeah, Marquise, man. Seriously, get at us. We've been. I think it's me, Ian, Rufus, Marcus, Pete, Ugo, all of us. We in it right now. We all run a very similar strategy. Been very profitable for everybody in the group.
All right, go ahead. My bad. No, go ahead. Sorry. I'm sorry. I'm so sorry.
What are you trying?
Can I get to the comments from here, or do I have to do something else?
No, I don't know what he's trying. I don't know what he's trying to do. So.
No. I was saying I interrupted you. Yeah, Marquise. My bad.
We good. I'm just talking. I see him replying. So I just want to let him know if you want to.
I'll see the comments.
All right, you can go ahead and end it, Mike. Then, whenever you're ready.
Okay, I'm out of here then.
My Facebook is not working.
Okay, well, thank you guys for staying on here. Marcus, Rufus, or Schizo, thank you.
All right, man. Catch y'all later.
See ya.